Live. There we are on Facebook, and I am going to try. Good morning, everybody, and do this. Try and do this gracefully up here as well. And we're live on Instagram as well. So get in the frame.
Here I am.
So good morning, everyone. It is 10 a.m. on a Wednesday morning. So we are here live with the Dahlia group on both Facebook and Instagram. And obviously we will be posting this on other platforms later. But just want to do a quick introduction.
Yeah.
This is Samantha Gehman. She is one of our lender partners with Centennial Lending Group. Yeah. And today we're going to go over just a few of the basics, application process, borrower needs, like what things you need to provide, things like that. And of course, different credit pieces that are
kind of
involved.
some of the things we look at.
So before we jump in, I saw someone do this the other day. They sort of waited a minute while Instagram told people that we're live. So I'm curious to see if I give us a second, if anybody else pops on or not. But so here we are. It is almost February.
I know.
Believe it.
January flew by.
Too many crickets. See it now.
Yeah, there it goes. It shows it.
Yeah, there we go. Okay, so we're going to get started then. So I'm going to let Samantha take it away. Like I said, we're in our lender series right now during our lives at 10 a.m. And Samantha is here today with Centennial Lending Group as a partner to give you guys some insight on things like the application process, things that are needed to be provided by the buyer, and of course the different credit pieces that come into play. So take her away.
Yeah, so I'm going to go through kind of what the application process looks like when you work with me. One of the big things that I told Rachel is that I don't call it an application. I call it a questionnaire, just because application seems to be a little bit more intimidating as far as, what all am I going to have to, we want to make it as simple and as easy and as comfortable for you. So ours is just a questionnaire, and it has just 5 quick tips that you have right at your fingerprints. Your name, your social security number, income, your simple things that you can do. I tell anyone that you can literally sit at a red light, fill out your questionnaire, and be done. But don't do that. But it's that easy.
But that's awesome.
It's that quick.
And is it done on an app that you have?
So it's not. So I usually send my link, which is loansbysamantha.com.
Okay.
If I send that in a text, you can click on it and it'll open right up into your Safari or whatever you use. Mm-hmm. And then from there, you fill it out, and then I get the information that you just filled out your application.
So you can fill it out on your website.
Yep.
Okay,
yep.
Awesome. All right.
Yeah, so that's great. So like I said, it's really, I always tell people, if it takes you longer than 5 minutes, you're overthinking it. Like, it shouldn't take you long at all.
That's awesome. Okay.
So that's one of the things that we, that's really different. I like to make it easy, and so that I kind of do a lot of the legwork for you.
Okay.
So, so after you apply, the next biggest thing is your credit. So once you apply, I'll go in and pull your credit, because if you don't have qualifying credit, then that's a whole different conversation that we have to have with you. But once we pull credit, then either myself or my loan partner reach out to you to start gathering more of the in-depth information as far as how long have you been employed for? Are you renting currently? Are you owning? How long have you been at that property? So those are some of the dive deeper into the things that we do after you've applied.
Okay, so basically, they fill out their questionnaire, right, on your website, via your website, and it can be something you can do at a stoplight, but don't actually do it at a stoplight. But 5 minutes, which is awesome. So it's not a daunting task. It's not, right, okay. None of this should be daunting.
Yeah.
Right?
Right.
It should all be enjoyable and easy, and so hence a questionnaire on a site, and then obviously you guys then doing your steps of pulling credit, and then finding out history, things like that.
Yep.
What pieces of their credit are you really looking at that would go towards whether or not they would qualify?
Yeah. So obviously first, one of the differences when we pull credit for your mortgage is we pull from all 3 credit bureaus and take your middle number, which a lot of people will say, oh, I went to Credit Karma and it shows this. So we usually tell people Credit Karma is not the best, and that we're looking at all three and pulling your middle. So that's one of the big things.
Are you actually pulling the middle number itself, or are you pulling like
we're
the
pulling? So we're pulling the median. So we're pulling all,
not the middle.
Yeah,
number.
so we're pulling all three.
Okay.
So 700, 720, 730, and
so
then
whatever you're. Okay.
Yeah.
Cool.
So so that's what we do, and then we look at, have you had any recent lates? Have you had bankruptcy? If you've had recent lates, what is that time frame? Has it been in the last 2 years? Has it been 5 years ago?
What's the difference between if it's been in the last 2 years versus?
So if it's a recent late, then it dings your credit more, and with some loan types, you can't have a late within the last 60, 90 days.
I was just about to ask you that. So what would be the general?
So the way that it looks on the report is it shows a 30-day, 60-day, 90-day, and it shows us like they've had 5 lates in the last 30 days. They've had 2 lates in the last 60 days. They've had no lates in the last 90 days.
Okay.
So we look at that, and then, like I said, depending on the loan program, you might not qualify, because if you've just had one in the last 60 days, then we can't put you. Underwriting would not accept it.
If it were outside of, say, those 90 days, how much it would affect?
So
their ability?
It can still affect your score, but it's not going to affect your underwriting qualifications.
Okay, cool.
So,
so that's
it's
what
not,
I was curious about.
So it's not, if when underwriting looks at it, it's not going to be, you've had a 90-day in 5 years ago.
Okay.
That's,
Okay. That's awesome. So, obviously, recent lates.
Yep.
I'm out of frame. Recent lates, bankruptcy, and what else are we thinking?
So those are 2 of the bigger ones on your credit. Collections, if you have any in collections. Another big thing, like your medical. Well, actually, they just changed it. So medical used to show up,
right?
But it does not now. But people used to think, that was going to affect me. But medical,
no longer.
Medical does not.
Actually, that's really good.
Yeah, so medical does not affect. Yeah, I just had someone the other day actually reach out, and they were like, "We have a few medical things on our credit," and I was like, "That's okay. Those aren't going to affect you."
Awesome.
So, yeah. So, but they definitely look at the collections, and has something recently moved into collections and that kind of stuff. And again, all those types of things also affect your bottom line for what your credit score is going to be.
Yeah.
So the more collections, the more lates, the lower your credit score is going to be.
Here's a big one in terms of that. Student loans.
Yeah, so student loans are kind of finicky because
I know, I feel like everyone
and it's hard
in our generation, our generation is paying or just finished.
Well, and then you had, with
loans.
COVID, you had that deferment period. So a lot of times when we pull credit, it'll show you're not making any payments.
Right.
Because you don't. And so what we do is we still have to count it against you. Okay. So we actually take 1% of the amount.
Okay.
And then we figure that's your payment. Okay. So like if you have a $30,000, we take 1% of that, and then we put in that because it has to be counted against you because you still have it.
Okay.
So
so even with the
even with the
That's
so like if someone like I just had it where somebody had 4 and they weren't making payments on any, so it showed $0. So I had to go through and figure out all of them and then put in those payments, and then you'll see their DTI.
Interesting. Okay. Let's go back to what the borrower needs to provide, right?
Yes.
So out of our things, sorry, I skipped ahead a little bit.
Yeah, that's okay.
I apologize. So there were 3 main things that we wanted to talk about today, right?
Yep.
And I skipped over what information the buyer needs to provide.
So for us, when we initially meet with you, once we've kind of figured everything out, the things that we will ask for is your past 2 years of W-2s, your past 2 years of federal tax returns, your most recent 30-day pay stubs, so basically 1 month of pay stubs, 2 most recent bank statements, and then a copy of your driver's license. Those are the initial things that we will ask for, just so that we can verify your income. We can verify that you have the funds. And then obviously your driver's license is just always needed. So we just ask for it up front because it's not something that's going to change.
And I know it sounds really silly, but I was at a consultation the other day with new clients, and part of our discussion was, I was like, this is going to sound really silly at the moment.
Yeah.
But may I please have your middle initials now?
Yeah. Yeah.
Because when it gets to your part and when it gets to title and
Right.
down the line,
Right.
if we don't all match and have that middle initial,
yeah,
well, there's going to be an issue.
Yeah.
So it seems really silly, but always tell me.
Yeah, yeah. So those are, so obviously no expired driver's license, right?
Right, yeah.
Don't send us an expired one. But yeah, so those are the things that we look for, just so that when we are telling someone we have you pre-approved, like we've already verified your income with your W-2s. We've already looked at your tax returns and verified those. We've already looked to say like, hey, they have the funds for closing if they haven't. Now, obviously, if you're getting a gift or something like that, then that's, a different conversation, and we wait till that goes in. But we verify all of that stuff. And those are the things we ask for up front. You'll be asked for like your most recent bank statements and pay stubs. You'll be asked for them again in the process because they have to be that within that time frame.
So by the time we get
by the time you get to closing, they're
for
already
those of
expired.
you that don't close immediately.
Yeah.
So obviously we see closings super fast,
Yeah.
and then we see some that take us from the day that we sit down and take all this information, particularly with the inventory at the moment.
Yes.
It
Yes.
takes a
People
little longer
yeah.
these days, so that information is bound to change. Which, on that note, with things changing,
Yeah.
I know we have, and I'm curious what your thoughts are. We have a kind of do not do any of these things.
Yes. Oh my goodness. Yes. Yeah.
From when we
Yeah.
start until
you closing.
we get to that
Yes.
closing.
Yeah.
So I know on our list we always tell folks, and I printed the list, but it's really small, guys. Obviously, not making any large purchases using
Yes.
existing credit. Let's say applying for any
credit.
Sort of credit,
Yeah,
right?
Don't go buy a car. Don't buy a car after we've
paying off, transferring, or even paying, like completely closing out credit balances. So a lot of folks don't realize that.
Yeah,
too.
that's those. So job change is another thing.
Yeah, job changes on here.
We want to make sure that.
Signing.
Yep. Because that counts. So yeah, don't open up any new credit. Don't before you're going to pay something off or do like. It's not like a definite no, but it's a talk to your lender.
Yeah, we have. Please speak with your lender.
So talk to your lender before you do any kind of changes, just so we can then look at it and say, nope, you can't do that, or you can do that. But it is a big thing of don't go make any large purchases, because now, right, we're counting that against you.
Right.
Don't open up new credit because that could affect your score, could make it go down. Don't close any credit because again,
that's the one that I think people don't understand the most.
Yeah.
The assumption would be, if I pay off my credit card, that's fantastic. Right. However.
Yes, I had, and that happened to someone actually. So I had someone who didn't reach out first and just was like, hey, I had this $20,000 credit card. Someone gave me a gift and I just went and paid off my credit card. And I was like, guess what happened? They didn't qualify now because it bumped their score down.
Moral of the story, always ask your lender.
Always ask your lender first.
But again, something like that would seem like a positive.
Yes.
For, if you weren't looking to get a mortgage. Yeah. Obviously would negatively affect your,
and that's what they thought they were doing, right? Like they were like, this is great, I just paid off my card, I don't have that debt anymore, this is going to be great. But unfortunately, when you're qualifying for a mortgage, it's one of the things that
so co-signing would be basically the equivalent of taking out your own loan.
Yes, yep, because right, if they don't pay that,
it's you,
guess who's paying for it.
Okay, do you have any other don'ts that you would add to that list in terms of credit? Like the different pieces, things that would affect your credit.
I mean, obviously, right? Like you don't want to make late payments because that affects your qualifying purposes too. So when I have that initial consultation with someone, if they're not ready at the moment, right, because of credit score, if we need to bring it up or they don't have down payment funds, kind of thing. One of the things I always tell them is don't Don't start being late on your credit cards. Don't start, taking out debt and then utilizing all of that.
Okay.
Because then again, that's going to affect your score. So those are big things that when I have a consultation with someone and they're not ready, I say, hey, in order to kind of keep you in good standing with that credit, make sure we're not making any lates, make sure we're still making those payments on time, make sure we're not, utilizing, if you have a $10,000 limit, we're not going to take
so
$8,000
I was going to ask you about
that.
That's on my list here too. So when it comes to that sort of thing affecting your credit, particularly, obviously we're talking about mortgages here.
Yeah.
But that balance that's held.
Yeah, and I wish I had the paper in front of me. So we actually have a paper that shows them their FICO and how it is broken down into.
Okay. So if any of you obviously would like to see what that breakdown looks like, put something in the comments or send us a direct message and we can make sure that Samantha is able to get you that
I should have had it. I should have had it print out because I could have showed it. But what it does is it shows it's basically this graph, this circle graph, and it shows you 30% is utilization, 5% is length of the time that you've had the car, and percentages may be off, so don't quote me on those until I look at the paper.
That's everybody.
But it shows you, your utilization makes up this amount of your credit. Your time, your length of time that you had that makes up this percentage. Yeah. So it shows on there. So so back to that, if you have a $10,000 limit and you have $8,000 or $9,000, you're utilizing most of your credit. Right. And so that hurts your credit.
Okay. I also, and I'm going to pull this up quickly again, it's really small. I must be just getting old, actually. So things that we also have on here when it comes to that's going to affect your loan and your pre-approval, all of that, your pre-approval and such, is obviously if you were to move during the process. So I actually just had this happen with clients that their lease
finished,
and they moved into a new lease, which affects obviously affects their lending and their financing. Obviously any changes within your salary, wages, things like that.
Yeah, anything. We try to, so one of the big things, is if we have a consultation with you in January, but in March, you just haven't been able to find the home, or you've been making offers, they're not getting accepted. I stay in contact with you the whole time, but then say we get to March, right? I will reach out to you again and say, hey, let's look at this loan again. Let's go back through everything. Are we still working at the same job? Have you got an increase? Have you changed? So I try to update your file every month and a half or so.
Okay, that's good to know.
Just to make sure that we have the most recent up-to-date information.
Okay. Because I was going to say, I also have on here, obviously, being able to provide proof of large bank deposits is also something that I have on my list.
Yeah, and we'll ask for those. So say that
what would be considered a large bank deposit that would need proof?
Yeah, so say that you just made a $10,000 deposit, right? Sold a car, whatever. They're going to see that go into your account and they're going to say, oh, this is out of the ordinary. Where'd this large deposit come from? And so then there's just a quick form that we have for you that says sold my car, shows proof of it, and then. But we will, if we see large deposits.
So is that anything over a certain amount, or is that anything over your average for whomever that person is?
Yeah, so it's kind of looking at their situation and saying, oh, hey, they throw $3,000 every, well, that's not out of the ordinary for them.
Okay.
But if someone, does not deposit that, and then all of a sudden we have the two most, we have these recent bank statements and we see, oh, this isn't something that's happening all the time. Here we go. This isn't something that's happening all the time. Then we'll ask, hey, where'd this large deposit come from?
Okay.
But yeah, that is one of the things that we will ask too.
And I also have on my list about that was very Lancaster County, guys. Here we are. Acquiring homeowners insurance immediately following going under contract.
Yeah.
How does that affect?
So
does it in what capacity? I know you're supposed to tell your lender.
Yeah, so you have to, so when we give you a pre-approval, we estimate homeowners insurance, right, based off of, this is what you normally see for a $300,000 purchase price. Homeowners insurance tends to be here. So we estimate that. Once you go under contract, though, you have to go shop for your homeowner's insurance. So you have to go find who you're going to go through. And then once you do that, it has to be sent to us because, again, that affects your payment, right?
Yep.
So that has to be put into our file in order to say, one, you have to have homeowner's insurance. So two, we have proof that you have it. And then three, that we can add that in so we know how much to collect and how much is going to be going into your mortgage payment.
Okay, that's good to know how that plays a part. So obviously, as your realtor, we can assist you and help put you in contact with, show you the information, all of those things with homeowners insurance. It's part of our process as well. But something to keep in mind, again, that's something that affects.
And we have people and we have people too. So I mean, sometimes, right, people have people that they use, but if they don't, then we always have people that we say, hey, these are great people that we have referred other people to before. You may want to call them and get a quote kind of thing.
That's awesome.
Because it also doesn't hurt to have two or three quotes before you decide which ones you're going to go with.
We usually will we'll give information on a handful of different, homeowners insurance that we would have worked with previously. And that's how we are too. We have a few that we work with, and so we'll. What does it look like between the pre-approval to going under underwriting?
So, well, it depends how long it takes, right?
So let's say we do a standard, we go under contract 45 days later.
So we just had, I just had one who just closed, and I probably started talking to them maybe 2 months ago, right? So
that's a good example.
So they got pre-approved. They knew their amounts. They were looking at homes and everything, and then they went under agreement. So they had a closing of 30 days. So once you go under agreement, depends how many days we're closing. So one of the first things is your rate, right? So that's the biggest thing that you go through. Once you go under agreement, I start having the conversation. Here's what rates look like. If you're within 30 days, we can lock with just standard pricing.
Okay.
If you go 45 days or 60 days, pricing is a little bit higher.
Okay.
So depending on where the market is, depends on if people choose to wait it out or if they're like, nope, we'll pay a little bit extra and we're just going to lock so we know.
Okay.
But that's one of the first major things that I kind of deal with you once you go under agreement.
Okay.
And then from there, my loan partner will put it over into underwriting. Underwriting will take a look at your loan, and usually there's some kind of more documents that they need.
I was just about to say, so what is underwriting usually?
All depends on, what we have or what they see as they're going through underwriting. And then usually that's where it comes into, we don't usually ask for large deposits up front. So it'll go into underwriting. Underwriting might say, hey, have this deposit. We need a large deposit verification. Or, hey, they were recently divorced. We need their divorce decree. They pay child.
Actually, I was going to ask you about that. I have this on here too.
So they pay child support. Again, it's not something necessarily that we always, the paper, it's not something we always ask for up front just because it isn't needed in order to get you pre-approved.
But it is part of the have on hand
it
documents.
Is, yep. So, if you've been divorce decree, child support payments, if you're making them, it's definitely another big thing to have on hand because you're going to be asked for it.
Yes, you will need them.
So basically underwriting will take a look at it, say we need, whatever they are suggesting they need. We gather those from them. Loan partner submits it back to underwriting. And then from there, if we don't need anything, then it goes into the process of clear to close.
Okay. I have a quick question about we also always request that everyone has. So from my end, I'm like, I know these are the things that you need.
Yeah.
Right? What I am not a professional at is the lending side how are those things then applied specifically? I should say, not that I don't know it, but I'm not allowed to be the one to, go through all of that because these are our professionals. So, names and addresses for landlords over years. How is that taken into account?
So we look at your 2-year property history. So if you have rented in, so if you've been renting for the last 2 years, we have to show proof of rent, right? To ensure that, you've been paying your rent and that for the last 6 months you haven't not paid rent
Stopped.
because
Why not? Yeah,
that's
okay.
a problem. So those kind of things, underwriting will take a look at those kind of things and say, hey, okay, they're renting. Have they been on time for their rent payments? Have they been in this property for 2 years? If it's been less than 2 years, then we'll ask you for your previous. Yep, we'll ask you for previous addresses so that we have that full 2 year.
Okay.
This is where they've been for the last 2 years. So we ask for that 2 year history, and then again, we will ask, for your rental to ensure that you've made these payments and that kind of stuff. So that's definitely a big thing.
Yeah, I was gonna say. So I'm just looking at glancing out at my notes. Obviously, for the immediate questionnaire, right? Let's go back for a second because we're talking about nitty gritty at the moment, and it gets to feel overwhelming. So let's take ourselves back, and we're gonna go back to the simple. For the questionnaire, 5 minutes.
Yes.
At most, right?
Yes. Yeah. No, I was gonna.
Or else
honestly,
you're overthinking.
You're overthinking
so 30
it.
Seconds.
30 seconds, definitely.
And it's just your first step, and it's something super, super simple, right? And this is something you can do on Samantha's website.
Yep.
Very easily. Her website is launchedbysamantha.com.
Yes.
You can find her information and her website on our partners page too on our site. So if you forget what I just said, or don't go back and watch the video. All of Samantha's information is with our partner vendors on our website. So super simple, 30 seconds.
Yes.
Fill out that questionnaire, and then it goes to Samantha, and she's able to go through the process where she starts to pull credit, right?
Yep.
And then we move forward from there. So pre-approval, how long from when they fill out that questionnaire?
Honestly,
if they get you their documentation and everything right up front.
Honestly, I can have a pre-approval done the same day.
Okay, that's what I was
that's how simple it is. Once we make that contact, if you apply for your take today for example, if you apply for your application today, I'm going to reach out to you, or my loan partner is going to reach out to you, and they're going to, we're going to dive into those questions. Once we have that information, we'll ask for your docs. If you get your docs back to us right away, we can start working on those numbers and have that out to you.
That's awesome.
The same day.
So part of the importance of having, again, this information, the part that we got down to that seemed overwhelming.
Yes.
If you have those things on hand and say, I know we provide our clients with, like a folder to keep all of those things in.
Yeah.
That way it's not overwhelming.
Yes.
And when you get to that point of selling or purchasing or wherever you are in your real estate journey, it's not daunting in any capacity.
Most of the things that you need, 2 most recent bank statements. You can go
everything's online.
You can go right online and ask for those,
online,
right? Most 30-day most recent pay stubs. A lot of us have an online portal or something like that, or some are still receiving their checks. So we just say, it's one of the big things that I tell people is if you still receive check forms, just ensure you're keeping your top pay stub. Because
so is a copy sufficient, or does someone need to have the physical original?
So if we have a copy from your employee, a copy is fine.
Okay.
We can definitely take a copy to look at. Because most of the time, if it's an online portal, you're printing it out anyway. It's a copy of what is showing on your online portal.
Copy of what you already have.
But I think the biggest thing for me is I like to make it as less stressful as I can.
Yes, that is our goal.
Easy for you to do, to understand, right? And I always tell people the two biggest things that you are concerned about is your closing costs and your monthly mortgage payment. So the other stuff is just extra. That is not.
Those are the two numbers.
Those are the two numbers that.
The other number I always throw in is just as a reminder of that earnest money in the beginning. Because a lot of folks that are buying a house for the first time don't know that there is a good faith sort of deposit in the very beginning when you go under contract. But that money is then applied to your closing costs. But you need to make sure you have it up. You need to make sure it's available up front.
Yeah, that has to be available up front, because you have to send that within
5 to 7 days typically.
Yeah.
And I mean, I've seen people put everything down from only $1,000 in that good faith up to the full purchase price of a house, to make sure that those folks that are selling know, hey.
Yeah,
they're
serious. We want this house. Yeah, and that
no games here.
Yeah, and I've had that conversation where and I'm just throwing out numbers, but I give you a $20,000 closing cost, right? I've had people say, but we have to give Rachel $10,000. That means we have 30,000. And I'm like, nope. You're going to give her that 10, and then that's just going to be applied to your closing. So then you're only technically bringing 10,000
correct
to the closing table because you've already given
provided that
the other 10.
So that other 10 would get held in escrow.
Yes.
So your two big numbers, closing costs and your monthly payment to look out for, and just know that a portion of those closing costs is something that would be provided up front.
Yeah, something you need to have in the bank.
Is there anything else that you want to add? I mean, we're about a half hour here, and we've gone over, again, questionnaires. Yes, sorry. I know. Guys, so when we do these Facebook Lives and Instagram Live, Facebook itself, it's horizontal, right? And Instagram is a vertical image, and so we keep losing ourselves on the Instagram image if you're watching on Facebook and wondering what in the world we're talking about. But simple, right? So questionnaire on your website.
Yep.
Move to the next step of the process, which is you.
Yes.
And you handle all of this sort of thing. And if the prospective buyer was to get you your documentation immediately when you were to reach out into something that is as simple as getting that pre-approval within the same day. That's a possibility.
Yep.
And then, of course, all of the different pieces that we kind of covered when it came to what affects your credit in regards to getting that mortgage approval. And then what happens, say you have to have the conversation with someone that they aren't able.
Yeah, so for us, one of the things for us is we actually have this cool program that if we pull someone's credit and they're not quite there, so depending on your loan program, right, the lowest credit score we can qualify for is 580. Again, that is a certain loan program that you can qualify for that. But say you're under that, say maybe at a 560, 570. We have a program that we can run that will say, it gives us the options, 600, 620, 640. So I can click on the 600, it'll pop up a screen and it'll say if it's 90% likely, it gives you a percentage of it's 90% likely, 70% likely. If I'm being honest, every time I've done it, I don't usually see anything lower than like 80% likely. But what it'll do is it'll pull up and it'll say if they do this should raise their credit score to 600 or higher. Something you have to do within the next 30 days. And then we run what is called a rapid rescore. And then we rapid rescore it. They give us the documentation showing that they did it. So for instance, I had someone literally just the other day, I needed them to be a little bit above a 620 and they were, I think, at like a 610. So I pulled up this program and I said, all right, what do they need to do to get above a 620? Theirs was super simple. They had a $300 credit card that they had to leave a balance of $13 on it.
Oh, okay. That's awesome. But that's awesome.
But it tells us that. And I send the screenshot and it will tell them, pay this to leave $13. So say that when we pull credit, it shows you have a $300 bill, but you've since maybe added $50. So you now have $350. You want to ensure that you're leaving that balance at $13. But I send them a screenshot and I say, okay, if you do exactly what this is telling you, we will rapid rescore it and see what it puts you at.
That's awesome. So, I did not know.
Yeah. So and again, that's something that we have at our company.
That. So this is the first time, Samantha, and I've had time to kind of actually live discuss the programs and things that are available with Centennial.
So we like to say never say never.
I like
right?
it.
Never say never. So we don't like to tell you this is straight no. We like to never say never. So we give you options, right? Sometimes it's not feasible depending on what they pull back. So I've had it where they pull back and they say, hey, you need to pay up to like $5,000 on different things, right? That might not be feasible because then they're taking that from their down payment. And so then that's where I would refer them to a credit repair person. To say, hey, not my expertise. Not my expertise, right?
This is the lender, this is the realtor.
This is the credit person who's going to tell you, ours is but what it is it's nice to give that option before we have to just send you
I
right
love
over to
that.
a credit person.
No, that's great.
You know, we have that option to say, hey, we're going to run this. Let's see what it comes back with.
Yeah.
If it comes back with something that's doable, great, let's do it. And then it's up to the buyer to take care of that. And then we get documentation showing that they paid it down to $13, run that rescore, and then if it bumps them
That's
back
awesome.
up.
How long on average do you think it is for people to fix a credit score that only needs 20 points?
Yeah, I mean, so right with this one that we have, when we do this is a 30-day window. First of all, when we do this, when we pull this, so you have to do it within 30 days.
Okay.
Or else it could change. It could.
Yep.
It could show something different. So this has to be done within 30 days. Most people, depending on what it is, people have done it the same day for me. Now the rapid rescore takes 5 to 7 days to get back.
Okay.
So the sooner you do what we need you to do, the sooner the score will come back. Mm-hmm. But I mean, I would say that I've done it before. I've had someone run a rapid rescore as quick as within a week. We've had the rescore back.
That's great.
Obviously, depending on what you have to do, if it takes a little bit longer or if whatever you have to pay takes a little bit longer to get back. Mm-hmm. But we usually say that we can get the rapid rescore once you get us back the documents anywhere from 5 to 10 days.
Okay. So again, though, but that initial within a 30-day window, obviously.
Yes. Yeah.
Because you don't want it to then change.
Right. Because then it changes. So, that 30-day window is where, and it'll say on there, this is good for 30 days. So it tells you. Just a reminder. And I usually reach out to, I
was just about to ask that. I'm sure you guys do follow up.
Yeah, I like to, exactly. I like to follow up and say, hey, have you been able to do this yet? Mm-hmm. Any questions you have? Do you need anything from us? So I always try to keep in contact to make sure.
Is there anything else that you would like to add to our discussion for the day?
Yeah.
I think this has been really informative.
Yeah.
And I appreciate your time, obviously.
And don't be overwhelmed by
don't be overwhelmed.
Don't be overwhelmed by all of it.
Go back to the simple. There's a questionnaire that you could do at a stoplight, but don't actually do it at a stoplight. That is on Samantha's website at loansbysamantha.com.
Yeah.
Or you can find it on our website.
Yeah.
On our partners page. Okay, well, it was a pleasure to have you.
It was
great. Wonderful. Thank you guys for joining us. Obviously, this is on Instagram, it's on Facebook, and we will be posting it on our other platforms as well. I'm going to do my standard.
Yeah.
You guys you can call or text us at the Dahlia Group at 717-333-7045. You can also email us at info@thedahliagroup.net. That's our general mailbox. You can find us on the web at thedahliagroup.net, where the lender's partner page is located. And obviously, always feel free to hit any of us up, including our partners, on these social media platforms at any time with any questions or even just, looking for a little extra information.
Yep.
So I'm going to try and do this gracefully. But thank you for joining us.
Thanks for having me.
Have a great rest of your day, guys. All right, here we go. All right, so we are.